But with the safeguard strategy, when something's broke like that, you can just let it play out, right? If I was doing the safeguard strategy in 2020, I would have had all my money back very, very fast, because that drop, that 30+% drop in, you know, what it was, it 12 days or whatever it was, that was still transitory. We ended 2020 up. Get it back. The markets are going to come back 100% of the time. They've done in the past, and they will in the future. So learn the safeguard strategy so that you can sleep at night. And then I want to point out that I believe the safeguard strategy is the perfect strategy for us all. We should all be doing it to at least a certain level. Even if you have that desire to have short term gratification. Right? You like that 7 DT trade, you like the 1 DT and the 0 DT. You can use the safeguard strategy in that fashion to some degree, at least the 7 DTE type of fashion. And that can help, but you would, if you set it up correctly, you have time on your side even more than the traditional primary option seller, right? Because when we are primary option seller, we sell something out of the money, and then we collect the money to say a put spread, then it has to fall a lot within a time frame before we lose. So the theta each day, that time decay each day that's happening, that is our ally, right? And for the buyer, it's the enemy. But if you don't even have to worry about time within an expiration period if something is going wrong. So for example, if you sell a put spread and it starts to go wrong, and it's going wrong in a decent manner, then now time is starting to work against you a little bit, because you need things to come back, and time is running out. That clock is ticking, right? But if you are using the safeguard strategy, you don't have that time that's ticking concept, because you can always take ownership of the shares and then have more time. And so that's what makes it safe, with the kind of concept of always having the ability to take ownership of the shares. We had John looking at that Vanguard ETF, right? And you have a lot of financial advisors out there, you know, preaching, just put your money in a Vanguard index to follow the market. And that's to a lot of people out there, that's what they should be doing, right? But you guys are here as Dorian Trader members because you want to work to outperform the market. You don't want to be average, right? And so, but what if you can take that average concept of that Vanguard, and then you can marry it to options to make it better. And so you outperform. If the market is up 10%, you're up more than that. If the market is up 20%, you up more than that. When the market is down 20%, you're down less than that. So you're outperforming the market in every type of aspect, because you understand options at a high level, but you have the benefits of what the people who are just buy and hold have, but they don't have that benefit of understanding options to marry it against those shares to least lower the cost basis over time, which increases your odds of winning. You want to understand the safeguard strategy. And so what I encourage all members to do is go into the video library. You should all have access to it. Every member of Dorian Trader gets access to the video library. Under the video library, it has what we call, one of the topics is safeguard strategy. We have 4 or 5 videos in there. I would go in there and study it, study it, study it, write down all your questions, email support with your questions, bring your questions back to live programming like this trading floor, and get your questions answered like all these other people were doing right now regarding parts of the safeguard strategy. Do it, because when markets fall, they will fall. You want to be able to hold, to be able to get your monies back, and be able to get it back faster than the overall market, because you understand options. And when the market is going up, you still want to be able to benefit from it, and benefit from it more, but still have a bearish component to it, because you understand options, and understand markets just don't go up in a straight line. Nothing's linear in these markets. We don't go straight down, and we don't go straight up. Okay? So jump into it and learn this strategy, and I think you're going to love it. We're going to be pushing it more here, because I want you guys to make money. I know it's a number of you that I've met with on the country right now, Ranjit. I know it's a number of you that's been doing this. You started doing this trade when the market was down in April, and you had amazing April. Some of you started doing it in February, and you're already back to even. Some of you started doing it in January, and you're already back to even. But so learn it, and we'll talk about it more. Before we continue with the video, I just want to quickly point out, if you need any additional help, please consider joining our trading club. You can do that by clicking on the link in the description area, and you'll get a 3-month trial for a flat fee of $60. We look forward to seeing you in the trading club. Back to the video. Yes, Ranjit.
Yeah, I just want to add that
Mm-hmm.
sprinkle what you said. It's a big difference in mindset, O'Brien.
Mm-hmm.
Like I was in the same like future trade and some of the safeguard strategies trade, you know,
Mm-hmm.
and I ended up losing on those. That couple of bread and butter. I ended up losing it, but over
Uh-huh.
here I kind of broke even now.
Yep.
So
Yep.
it's just like for me, it looks like I'm going to look more into safeguard. You know.
So I want people to have your biggest portion of your account. This is where we're pushing going forward for Dorian Trader. Want to have your biggest portion of your account size in Safeguard, but you can still have portions in 0, 1, 7, bread and butter, things like that. Bread and butter is still going to be my main because that's my thing. But but I've fallen in love with the Safeguard because of the fact that when markets drop the way they did in April, the way they did in COVID, if you are a primary option seller, if you're doing something like the bread and butter, which I kind of built my career on, you're going to get hurt. You're going to get hurt during that time frame. It's no doubt about it, right? And sometime doing, if it's something like COVID, you're going to get hurt a huge amount, right? And so you have to put in measurements of what, how you get out once you hurt, right? So you guys heard of the 20% rule we have here at Dorian Trader. Well, that's because of COVID. For me, is that okay? COVID hit me really hard. In the future, I said, okay, I want to make sure I'm never down more than 20%. If I hit that 20%, I'm going to get to the sideline because the way I trade, that shouldn't be the case. And it means the markets are broken, something is wrong. And so sometime you're going to have markets that feel broken because the market makers and the exchanges and the brokerage firms, they're all in fear just like you are. And so all the pricing and all it seems like the platforms don't work correctly and all of that because everything is out of whack. It's broken for that at least that time frame. So but with the safeguard strategy, when something's broke like that, you can just let it play out, right? If I was doing the safeguard strategy in 2020, I would have had all my money back very, very fast because that drop, that 30+% drop in, you know, what it was, 12 days or whatever it was, that was still transitory. We ended 2020 up, right? And so if you can hold out, and it's going to look nasty, even with the safeguard strategy. Sometimes you guys know, Gordon, your P&L might look nasty, but when you look at it, when you have collar strategy on or something like that, you look at it and you say, okay, it could be crazy worse if I didn't have this collar strategy on. And then you know that you can get it back. The markets are going to come back 100% of the time. They've done in the past and they will in the future. So learn the safeguard strategy so that you can sleep at night, and then you can structure yourself in a way the short-term trades can have bigger percentages. That's what's sexy about it. You got, the real short-term gratification, and you can have some huge percentages, but you want to set it up in a way that a short-term trade can't put you out of business. So so if the threshold is 20%, right, and you had $100,000, just easy math, everyone. If you had $100,000 and you let me write that 100 right. You had $100,000. 20% of that $100,000 is 20,000, right? 20K. If you are trading zero DTE, for example, what we just did today, you trading zero DTE with 20K of your account, and something completely goes wrong, your stop loss doesn't work, your stop loss order doesn't work, and the market goes in such a crazy way that next you know you're at max loss and there's nothing else you can do, right? It's nothing you can do. Your stop loss was not hit, and it just blew through it, and the market just kept going in the direction against you that it was just nothing else you can do. Well, that 20K is gone, but that's still only 20% of your account. You're not done. Your business is not over. Your trading is not over. If you counted on it as a great monthly supplement, it's not over. If it's your primary income, it's not over. But if something like if you're using all your 100K on a zero DT trade and something like that happens, it's rare. It's very, very rare, but it's not impossible to happen. Then you do have risk of ruin when you're using all of your account on a zero DT or one DT or seven DT type of strategy. When you're learning it initially and you have a small account, then you're not gonna have this luxury to do what I'm saying here. You still want to exit when you're down 20%, but you're going to have this risk of you losing your whole 5K or you losing your whole 10K. But you understand that in of the process when your account is so small and you're trying to grow it. But if you have a 100K account, it's no way, in my opinion, it's no you have no business using all of it or more than 20% of it on short-term trades. That's my opinion because I can't afford to go ruin, right? I can't I and most of us on the call can't, right? So you don't want to have that ability to for you to go ruin. And this is kind of concept I get from Nassim Taleb is that you want to be this anti-fragile kind of concept is that you can't go broke, right? Yeah, you know you're gonna lose some at times, right? And obviously you're gonna win at times, but you don't want a situation where you wake up one day and your whole life has been changed because your account blew up. You don't want that. We should be able to avoid that as traders, and when we get up to a certain amount of capital, we want to avoid that at all costs. And then when our capital is at a smaller amount, we still want to put in measures to that it's almost impossible for us to blow up still, right? It's a very small possibility. Um, but I'd rather have no possibility. And so if you're trading like what I'm showing on the screen right now, that's no possibility because if 80% of your account is in safeguard, you're not going to blow up. And when I talk about safeguard, I'm talking about doing it in stocks that cannot go to zero and won't go to zero, and if they can go to zero, you won't go to zero because you have the collar on it and you got that protected put. And then when the markets or you're doing it on indexes and that's not going to go to zero, but markets can drop, indexes can drop a lot, stocks can drop a lot. So when things are near all-time highs or things been going up a lot, okay, it's time to collar that stuff off because when we drop, we're most likely going to drop in a big manner, and I want to avoid that. So and the safeguard allows you to do that. And then you're going to have times where you're going to have to get aggressive with the safeguard. If you've already had a 20% drop, already had a 30% drop, that's the time you have to start getting more aggressive because we're going to come back. We don't know when, but we know 100% of the time the markets come back. And when they don't, then it's going to be a bigger situation. Maybe, climate change finally got us. I'm being a little facetious on that one, but you never know, right? So anyway, it's not going to be in our lifetime, none of our lifetime, maybe our, grandkids' lifetimes. And I do care about them as well, even though, they haven't been born yet. Anyway, any questions on this? Any questions why the safeguard is so important?